Hi guys, how's it going? It's Aldatom Chagi and welcome back to my YouTube channel. As you can see by the title of this video, I have received dividends from 3 of my stocks, Emira, Ebola and Storage. It's not a lot of money though because my account is small. Before we get into it, let's firstly unpack how dividends work. So if you buy shares in a company, you actually own a tiny piece of that company. And if you bought shares in a company that pays dividends, you are going to get rewarded on the number of shares you own. Remember, not all companies pay dividends, so if you want to receive dividends, you have to make sure that you invest money in a company that pays dividends. So when these companies make profits, they share some of the profits with their investors. I've touched on this in my previous video that when you buy shares in a company, you need to make sure that it's a company that is profitable. So you need to always make sure that you check out a company's financials. If a company is not making profits, what are they going to share with their investors? So if you are a dividend investor, you need to make sure that a company is profitable. Otherwise, you will be losing out on your investment and you won't get any returns. So it's very much important that a company should be profitable. So in South Africa, most companies pay dividends twice a year. So if you own shares in a company, you're going to get paid twice a year just for owning shares in that company. Let's say you own 100 shares in Shoprite and they declare a dividend of 20 cents per share. You are going to receive 20 rands in dividend income. So with dividend income, depending on the number of shares you own, if you want to get to a point where you live off of dividend income, you need to buy more shares. As I've mentioned that I've received dividends from 3 different companies. Let's firstly look at Ebola Income Fund. They declared dividends of 25 cents per share, which was paid on the 12th of June. And if it's your first time buying shares in a company and you want to receive dividends on their next payment date, you should buy them before the ex-dividend date. If you had bought shares in Ebola on the 6th of June, you were going to receive dividends on the 12th of June because of the ex-dividend date being the 7th of June. So you were supposed to have bought the shares before the ex-dividend date. The dividend yield was 14.39%, and this shows how much a company pays out in dividend relative to its share price. And to calculate it, you divide the dividend per share by the share price. And the dividend yield fluctuates with the share price, so it will forever change, and we can see that it changed multiple times since December 2021. It was 20.39%, and then in June 2022 it was 19.82%, and then in December 2022 it was 17.3%, and then now when they declared dividend it was 14.39%. And when the share price goes up, the dividend yield goes down. So a low dividend yield does not necessarily mean a company is a bad company, because it's based on the share price, which fluctuates all the time. So personally, it's not really a reliable factor because of the time at which it's calculated and because it fluctuates. And it is worth looking at honestly. It's just not really as important as we think it is. So you should also look at the company's earnings and dividend history. Remember, your dividend income is based on the number of shares you own. So the more shares you have in a company, then the more the dividend income is going to be, regardless of the dividend yield. So if you now go and consider dividend yield above the earnings per share and the dividend history, you might not get as much returns as you think you would get looking at the dividend yield, especially because you would want to consider a company with a high dividend yield. And looking at their dividend history, they've been paying dividends for more than 10 years. So hopefully they will declare dividends in December this year. And because they declared dividend per share of 25 cents and I had 57 shares in it, so my dividend income was 14 rands. The second company I'm going to look at is Storage Property REIT. So I'm on the dividend section, and they had a dividend yield of 9.38%, and they've declared 58 cents per share, and I have 22 shares, so my income dividend was 13 rands, and they've been paying dividends consistently since 2016. They've also paid in 2020, and it was COVID, and a lot of companies cut dividends at that time. And storage is considered to be SA's biggest self-storage property fund, and it's doing so well. So if there's one company I'm going to hold on to, is this company. The last company I'm going to look at is Emira Property Fund. Also, I'm on the dividend section. They declared dividends of 30 cents per share, and I own 30 shares, so my dividend income was 9 rand. This is the lowest dividend income I have received from these three companies, and its dividend yield is 17.52%, which is higher than the other two companies, but the dividend income is lower than the two companies, and yet I own more shares in it compared to storage. I own 30 in it and 20 in storage, but I got a higher dividend from storage with a dividend yield that is less than Emira. I don't know if this means that the higher the dividend yield, the lower the dividend income. I guess it's worth finding out. But then, if it's any consolation, they've been paying dividends for the past 10 years, and they've also paid in 2020, which is a good thing. So the total dividends I've received in June and July is 37 rand 16 cents. I pulled this from Easy Equities transaction history. And as much as the dividend income is not that much for each of these companies, given the fact that I don't have that much invested in them, I think now I have only 300 invested, and I've received that dividends from them. Even if it's low, I just feel like it's reasonable for the amount that I have invested. So with dividend investing, I feel it's advisable to follow the dollar/rand cost averaging approach. This will enable you to buy shares at different prices and sometimes even cheaper. Then you'll end up having a lot more shares, unlike when you put in a lump sum of money, which you're going to buy maybe like 100 shares at the same price. So we know that the market is volatile and share prices fluctuate all the time. So it's best to invest that lump sum of money weekly or monthly. So let's put up two scenarios of lump sum investing and rent cost averaging. If you put in a lump sum of 50,000 in Shoprite and the shares are trading at 100 rand, you will have 500 shares. And if I rent cost average, today I will buy shares at maybe 83 rand, and then next week at 90 rand, next month at 75 rands. So I will end up owning more shares than you, who would have put 50,000 all at once. There's the advantage of rent cost averaging. And with the market being volatile, honestly, rent cost averaging just makes so much sense. And if you believe in the companies you are buying shares in, you wouldn't really stress much when the market fluctuates and the share prices are different each and every day. Instead, you would be encouraged to buy more shares at cheaper prices, because if today a share is 100 rand and then tomorrow it's 75 and then the next week it's maybe 65, then you would buy more shares knowing that your dividend income will be a lot more, since it's dependable on the number of shares you own. And at this point, with my dividend income being so low, I reinvest my dividends to buy more shares. As you can see that right after receiving my dividends, then the system automatically reinvested my dividends and bought more shares. You can see that there's a negative 13 rand and a negative 9 rands. So for you to set up the dividend reinvestment option, you're gonna go into your Easy Equities and go to account overview and go to your holdings, and then I'm gonna click on growth point, and then when you scroll down, you will see there's it says your dividend rewards are set to reinvest the income, right? You tap here to change, and then it gives you that option, right? So you can see that I have clicked on automatically reinvest the money into the holding. So every time when I receive dividends, then Easy Equities is going to reinvest my dividends. I won't have to manually do it, and then maybe one day when my dividend income is a lot, I can click on the option to have the money paid into my account. So it's the end of the video. Thank you so much for watching. Until next time, bye.